afternoon, good morning, wherever you are. This is the Binary Geek. I promised to do a video on supply and demand and zones and you know and order blocks. Okay, so I am just going to start that off right now. Okay, so for example now, say for example, we were in perhaps an uptrend, right? So we're going to start off. We're in an uptrend, price is going up, and then all of a sudden you notice that price starts to consolidate in a little, you know, kind of zone right here, okay? Now, this right here can be looked at as a supply and demand zone, okay? The reason being is that there is liquidity being there's liquidity being formed above here and liquidity being formed below here, okay? So quite often what you will find happen is that you will have traders that are waiting for price to break out to the upside, okay, like that. So then they will have something like a buy stop, placed just above the zone, right there or something like that. Okay. So, and then you'd have people that are looking to short this, thinking that price is going to reverse, and they would look to sell it, and they will have sell stops right below here, and they would have their stop losses above here. Okay. The same for the buy stops. The stop losses will be right below here. So this creates what you call liquidity, okay, because there are a lot of orders. You have buy stops, you have stop losses, maybe you even have maybe you even have at the top of the zone, maybe you even have sell limits, like people are looking to get into the action right here and like sell until they're looking to get in. So you'd have something like a sell limit, and price comes, they would have the stop loss right above here, okay, and the entry right here, and the sell limits will be triggered right here, and they will be expecting for price to come down and hit the bottom of this supply and demand zone right here. Okay, now another thing, this is a supply and a demand zone, but it's also a order block. Okay, it can be used as an order block as well. Okay, and I'm going to explain why it can be used as an order block and why it is an order block, or try my best. Okay, so let me just get rid of all this. Okay, so you have the supply and demand zone. Okay, price, sorry about that, price breaks out of the supply and demand zone and starts to move upwards. Okay, so what's happening here right now is this area right here will act as a demand zone, because you have the market makers pushing price down at this point. Normally, sorry, let me delete that. Okay, so normally what would happen is you would have like a fake out to the bottom and then a push up. Now this last move right here, so you would expect that price would eventually come back down to this area right here and continue up, creating higher highs. Now, in terms of structure, okay, in terms of structure, you would have to say that this last move right below here is the catalyst of the break of the structure. okay? So this move right here would be the catalyst of the break of this structure point right there, okay? So now what is this right here? Normally, what you would find right below here is an order block. Sometimes it doesn't have to be like perfectly below there. You know, it's just the last down candle before the up move, okay? So I'm going to take you to an example just to kind of make it clear, okay? Let me just get rid of this. Okay, so this is an example of gold, okay? Right now you have, so we notice that price has been in the uptrend right here, okay? And then price starts to break low, breaking, you know, this structure point right here, okay? So you could say at this point, okay, price is in a downtrend. It's a shift of structure. Now you notice that, let me see if I'm recording. I hope I'm recording, you know. Let me see if I am recording. Yeah, I'm recording. Sorry about that. Yeah, so price breaks the structure right here, right? And it's in the expansion mode. It's trending down. Okay. Now what you notice here, you have a pause in price right here, creating this order block right, creating this order block right here. Okay. So and then price broke down. Okay. Now, as you can see, price came back and filled this order block, or this well, it's pushed down, so it's a supply zone right now. This thing right here is a supply zone. I'm sorry if I'm talking a little bit confusing. I hope you understand. So then what you would do at this point right here, right, is you would look for the last up candle. Let me zoom in a little bit, which is, you look for the last up candle, which is this candle right here, okay? Before the down move, and this broke this structure area right here, signaling a continuation of that downtrend. Okay, so what you would do, okay, is you would draw your little zone right there. Okay, so let me grab a box. You would draw out your little zone right there, okay, from this candle right here. Okay, now it is honestly and 100% up to you how you would look to get involved in it. So at this point right here, price broke down. Okay, some people, they like to take it from the 50% of the sign. So let me just draw a quick fib on there. Okay, so Fibonacci, the 50%. Okay, and they would enter right at the 50%, because that gives you a better risk to reward ratio at that point. RRR, risk to reward ratio. Okay, so then you would wait for price to tap. Now some people, what I noticed some people like to do, some people would put their stop loss right at the top right here. That doesn't make any sense to me. You've got to give the trade just a little bit of room to breathe. You have to take into especially when shorting, you have to take into consideration your spreads and stuff like that, because your spread can take you, especially when you're trading gold, the spreads can become quite wide. Okay, and I hate being stopped out by the spread and then price continues down. Okay, so now what you would do right now is, to enter, you would just, let's get the short tool. Our entry would be at this point right here. Okay, we'd have the stop loss a little bit, and a little bit above here, you know, just a couple of pipettes or pips or whatever, just in case, you know, the spread wants to take us out. And then you would have your take profit here at this structure point right here. The reason being is, you know, this point right here, there would be a lot of people maybe looking to buy at this point, you know, thinking and have their stop losses below here. So what you're doing is you're buying here and you're actually hunting the stop losses at this point right here. So, you know, you could either take a nice 4.87, you know, or whatever off of this trade at this point right here, you know, or you could peel off, I don't know, 50-80% of your position. To me, I prefer to take most off at that point, and then you could let the rest run, you know, trailing your stop losses, trailing your stop losses. I'm sorry, I'm critically new at this, as price continues to go down. So you would trail your stop loss here, okay? You'd be trailing your stop losses at these swing highs until price eventually breaks it, and you would get stopped out. Your second position would get stopped out at maybe, you know, right here at about 8 to 1, you know? So now generally the more price comes back and plays with this supply zone right here, the less stronger it is. To me, 2 to 3 touches is okay, but anything over that, you're asking, you know, to get stopped out, you know, because it already formed right here. You have 1, 2, and you have 3 touch. This one gave you a really nice move down, okay, but you know, with all honesty, I would not be looking to take that trade, okay? I would not be looking to take that trade, okay? So now let's delete all that, and let me just show you one more thing, okay? Now, in terms of other ways you can look to get involved in terms of using order blocks, okay? Here you go. You know, say for example, price is pushing down, pushing up, price comes down, and then push up, okay? Okay, you do not have any kind of consolidation here. You just get a nice clean push up. The last down candle below here, okay, before the break of structure, before this break of structure right here, okay, this is an order block, and you can expect that price will most likely later come down, you know, tap that order block, and then continue to move upwards. Okay, I'm gonna look for an example on the charts for you. Okay, but it's the same general concept, it's the same thing. I'm just, you know, showing you different ways of looking at it and stuff. So yeah, let me just delete all this crap right now and look for an example for you. Okay, yeah, and yeah, I'm on a 3-minute chat. I do trade on the 3-minute chat. So but let me go on a 15-minute chat and see if I could find a better example. Okay, this is something that has not played out as yet, I guess. However, you could consider this up candle right here as, you know, the catalyst for this down move right here. Okay, so what you do is you draw out your zone. Okay, so you want to take I don't know, this, and include this upper wick right here. Okay, you draw this across right there. Okay, and we're going to look at this at another day and see how it plays out. Okay, Now, if price comes back into this zone right here, okay, at 50%, let's drop a fib on there. Okay. Now, in terms of refinement, you could go down to the lower time frame and refine it a little bit more. Just know that it is going to be a little less likely that price is going to come and trigger you in, because sometimes it will come and it will just come to this area right here and then push down. We'll come to the opening and push down, but you know, it's just kind of just up to you what you prefer and whatnot. Okay, so we take it to the 50% right here, and let's just refine it for the sake of refining it, because I do refine quite a bit because I trade on the 3-minute chart. So I would be taking my entry on the 3-minute chart as well. Okay, then, so let's go down to the 3-minute chart. Okay, so then our entry would actually be at this point right there. Okay, this would be our entry right there. Okay, you could just let the whole thing, or you could refine it even more and just drop the fib there and then make the short tool right here. This your entry, you know, is up to you, and aim for, hold on, price comes back, you maybe aim for this, some sort of structure low. You could aim for this structure low, but at this point, because price went into consolidation, I'm not quite sure if price is going to make it all the way back down there. But you know, just be reasonable. You know, wait until the price pushes up, and then maybe you could aim for this these lows right here. Okay, maybe you could aim for these lows right here, or these highs right here. Sorry, let me just, yeah, aim for this when price do eventually push back up. If you have a compulsive move upwards, you know. So I mean, anything from 3 to 1, 4 to 1, 5 to 1 is great on any given day. If you're risking 1% of your account, it's great. Okay, especially if you have like maybe a FTMO account, which I do trade, and is leveraging how much I leverage. You know, I would use like let me see how much pips that is. I would use like in something like this. This is like what, 7 pips. I would easily drop 3, 4 standard lots on this bitch right here. Okay, like yeah, risking maybe $300 or whatever to get, you know, whatever this is. So you'd risk 3, and you could, you know, you could potentially make $3,000. Easy and simple like that. But I hope you understand. If anybody has any question about what I just went through, please send. I'm going to leave this as is, and then look and see how this trade plays out. Okay, you could look for it on the 15-minute chart and see if it played out better on the 15, or if it played out better when you refined it to the 3-minute chart, and see what works better for you. But that's basically it for the video, and thanks for viewing, and I hope you understand everything. If you do not understand everything, I have a Telegram channel where I post all my trades. It's completely and 100% free. I post my trades beforehand. Well, I just started it, so, well, you know, because a couple of my friends said, hey, yo, just get a Telegram channel and just start it. You know, I have a few friends in Discord that I send out trade ideas to and whatnot, and they say, just start a Telegram channel. So I started the Telegram channel. So if you like this video, please subscribe, and, you know, like it and share it maybe, you know. If not, thank you for watching the video and do have a good day.